Guys, welcome everyone to our live stream. This is Max, and today our guest is Phil Millo. So guys,
Hi Max.
thank you for being here, Phil. It's a pleasure having you here.
My pleasure.
Okay guys, let's not waste any time and let's get started. So Phil, first of all, tell us about your background. Tell us everything.
So my background actually is probably not what people expect. So I've never done a job for anyone under any circumstances. I've always been an entrepreneur, and I've worked in companies that I've founded and I've run. So nowadays there's a lot of people that know me as sort of blockchain Phil or crypto Phil. What a lot of them don't know is that in addition to doing that, I've done sort of proper grown-up so-called institutional finance for 10 to 15 years. But what a lot of people don't know is that before that, I was actually an internet guy. In fact, I was really one of the first internet guys in the UK. I actually founded the first internet agency in the UK in, I think, 1992. Back then it was called Principia. And then that grew and grew and grew. In fact, there's a funny story, which is that because a lot of my clients were, in those days, were merchant banks, now we call them investment banks, but in those days they were merchant banks, and they were all around the Liverpool Street area. I couldn't afford back then, I was like a kind of kid in my 20s, 92, 93, I couldn't afford rent in that area, so I moved just a little bit up the road behind a strip club to a place that I could afford, and it was like, half the price, but close enough to walk. And then as the internet grew, there were really only two companies. There was mine and there was another company called Web Media that was based in the West End of London. And one by one, every other internet company either went to the West End or where I was. And where I was is Hoxton and Shoreditch. Okay. And that is basically why Shoreditch is trendy right now. Because had I moved to a different part, then all the web agents would have gone there, and then you get the designers move in. Okay. So I'm telling you, I should be mayor of Shoreditch. Yeah. But when I moved to Shoreditch, there was one pub with sawdust on the floor called the Bricklayers Arms. Okay. And now, so you got me to thank for the house prices. But then when the internet sort of nuclear winter set in like maybe 2000, then I was doing some private equity as principal, and my background is mathematics. So having had a very technical background indeed, I then became essentially a technical finance guy, and we did complicated stuff like engineering and rigging up bonds and doing a lot of amazing stuff with data. So we weren't doing the kind of finance that means that you're selling to people in the street, but we were working with some of the largest funds in the world, helping them design stuff. And then, of course, when blockchain came along, well, this was like coming home, right? Because it's like, oh, wow, technology, I can do that. Finance, I can do that. And, of course, everything that goes around it, like regulation. And it's amazing to me how, well, most people actually in blockchain, if I'm honest, probably don't even understand the tech. But most of them don't understand the finance. And that's not a criticism, but they just don't necessarily have the background in it. Sure. But what I will say is this. The first time I came across blockchain, before I even knew what it was, I knew what it meant, because I could see very powerfully in people's eyes what I'd seen and who I was back in the early and mid 90s. And you have this sort of, it's the combination of real sort of passion, but at the same time, not quite desperation, but this sense that you're speaking into an echo chamber and people don't understand and they don't get it. Yeah. And, that's the thing that people forget about blockchain. It's probably a cultural change as much as it is a kind of a technical change. Just a little bit about me as well. So, in fact, I went to someone's wedding a year ago, and it was so funny. And I hadn't really thought about the internet for a long time. And this was a guy that I hadn't seen for 15 years. And he introduced me to his fiance and said, "This guy invented the internet." And I was thinking, wow, now it's said that about me for a long time. But, no one writes a folk song about finance, but they write folk songs about the internet, and they're going to write folk songs about blockchain. They're writing them now, so it's good times.
Oh, cool. Very, very awesome to hear. And then obviously, if we speak now more about blockchain and that whole idea, like you said, even the internet, right? for people to understand blockchain, we still have a very long road to go because people still don't know how the email works, right? So that's the thing that everyone's using and it's widely adopted, right? But obviously now, blockchain is something completely new. It's been around, about 10 years. So obviously, there's only a handful of people that really know the tech. And I'm happy to speak to someone that does know it.
Well, yeah. I mean, but there's a funny thing as well, like, which is, so a lot of guys I meet, they've done like a sort of, there's quite a popular course, I think, at the Said Business School in Oxford, which is a kind of a blockchain primer. And I've heard kind of mixed things about it. But what's interesting is, I think one of the things that they teach you there is they teach you how it works technically, and how sort of the encryption works, and asymmetric and symmetric encryption, all this kind of crazy stuff. But when I think about the internet, I don't know if you really need to understand TCP/IP protocol and the limitations of IPv4, which is why we had to go to IPv6. I'm not sure this stuff matters. I'm really not. And so the technology is really important to understand the limitations and the potential and understand what it's capable of. But some people have to really understand the tech. Some people do. But you can still, I think, have the vision of understanding the potential for disruption without necessarily getting bogged down into, the theoretical vulnerabilities in, consensus algorithm, something like that. But,
sure. Yeah, that gets a bit technical, but obviously understandable because obviously there's always the business side and technical side. So actually, I wanted to ask you how you actually got into the whole space of cryptos and blockchain. What was your first encounter? And since when have you been kind of in the space and just building up the infrastructure or just working generally in the blockchain area?
Yeah, well, my first, I think everyone's got a kind of a story a little bit like this. So I'm not even sure what the year was. I think it was like 2015, and I was doing something very kind of deep and technical in finance. And there's an old friend of mine who is an inveterate gambler, and he's a minor aristocrat. And I won't give you his name, but he's Sir something or other, and we knock about together. He's like 20 years older than me, and we've sat on some of the same boards. And really, his passion is horse racing and new sort of schemes and new ideas. And I guess probably he wouldn't mind me saying get rich quick schemes, right? And so he may have been a little earlier actually. He originally told me about sort of Bitcoin because he'd come across it honestly as a get rich quick scheme. So I kind of looked, and he always used to get me to look at it and see if they were any good, and I'd probably say not really, and then he'd do them anyway, that kind of stuff. As looking at it, I ended up buying some Bitcoin, and it was really a little bit challenging to do in those days. And I don't remember how much I bought. And then we looked at it, and then I kind of left it, and I kept doing finance. And then when it exploded, so this would have been a little while before that actually. Then I remembered that I had some, and then I realized that I had lost it because I could not remember the passwords of the account. Yeah. So I spent a lot of people, it doesn't really matter, right? But I spent a lot of time going through my passwords, trying to figure out it wasn't Coinbase with sort of weird wallet over here, and had I got it on a laptop or and it wouldn't have been very, very kind of much. It would have been, I don't know, a few £100 that I bought, and it would have gone up, I don't know, maybe sort of 100 times or something like that. Now, there is a story that I know about a guy who's a friend of a friend, and again, I'm not going to give his name, but he runs a bank in an Eastern European country, and I shouldn't be laughing, but he lost... it was some crazy amount, 500 million, and it almost drove him mad. Now, he was incredibly rich anyway, but it basically almost drove him mad. And he did things he hired hypnotists, he hired sort of gurus, he went on a retreat, trying to I think he even hired IT guys to try and build him a replica of the site where he must have typed in his password to kind of bring it back. And no, it's kind of gone. But everyone's got stories like this. One of my closest friends, he was a kid, and he discovered Bitcoin because he was a gamer, and I think he was playing, I don't know, it might have been Half-Life or something, but he needed Bitcoin to get some power-ups or something. Yeah. And so he bought them at 10 cents. He didn't know where they were. And then they went up to $1. And so he sold them for like £10 profit, and he thought it was absolutely amazing. Yeah.
Yeah.
Good times, right?
I've seen that as well. There was basically, I think it was some Twitter status a while ago, and basically that status was around 2011, and someone just wrote, bought my Bitcoin for 60 cents, just turned it around for $220, and then someone,
absolutely.
That's just incredible. Yeah.
I know, we're like killing ourselves because like Bitcoin's on the floor at £4,000.
And then I think the story at the end was that someone in 2017 wrote, "Bro, I hope you bought some more." You know, because $2-3 is a real bargain. You know, so incredible.
Well, I think everyone's got a story.
No,
like
of course,
right?
Of course. Even I myself, I think I was in a nightclub or something. And a friend of mine, he started talking to me, about Bitcoin as well. This was around 2015, late 2015. And I was just like, sure, whatever. I'll just listen to him because I guess I had nothing better to do at that moment. And it was probably, the best advice I've gotten from any friend of mine, because he just said, this is how it works. He showed me his wallet, and in the nightclub, what he actually did is, he just installed, a Bitcoin wallet on my phone, and then he just sent me, I think it was maybe €1 or €2, just as a test example. And while this was happening, I had no idea what was going on, but somehow, from his phone to mine, he just sent me, €2, and I was just shocked. I was like, wow. What's this about?
There's a guy I know who I've done some speaking with, and I kind of know him reasonably well, and he describes himself as the Bitcoin guy, and that's basically what he does. And I've been I was I think I was in Sweden with him, doing a speaking gig a little while ago, and he kind of got bored because I don't know, we were like waiting in airports or something, or we were in a restaurant, and he just called out the waiter and said would you like some Bitcoin? And he does this thing, and he basically says, look, it's going to take about 10 minutes, and he installs an app on the phone and then sends them some Bitcoin. And it's absolutely crazy. Yeah. He's from Cuba. And what I find really amazing is not that he does that, but about half the people say no. Because they think it's a scam, or they don't know what it is, or they're just a bit kind of weirded out and freaked out. He's a fascinating guy. He's kind of a bit of a crazy guy anyway, because he loves the Cardano ADA coin so much. He tattooed it on his arm, which is definitely what I confirm is really going all in on a coin. But when the ICOs were really hard, I'd always ask people, you say you're passionate, right? You're going to do it on your arm, like my friend, because you normally find out they're not quite as passionate as they thought they were.
Yeah, I guess after 2017, a lot of people lost their passion, hopes, and dreams. So that's actually, a topic of ours that I want to speak about. So we've seen, it's until now, it's already been a pretty crazy ride. And the whole hype year of 2017 was, the first time where pretty much anyone, even if they knew Bitcoin or they didn't, they just wanted to buy it, right? And that gets me thinking that year, right? So it's obviously not sustainable, right? So in your viewpoint, what was probably some of the biggest issues that year, that caused that crash?
Well, before I answer that question, again, let me just kind of go back to the internet. And there were many crashes of the internet. And of course, there's a big crash of when it was 99, 2000, when the bubble burst. And here we are, the internet lay in tatters.
Yeah.
Did it really? Because, I don't know, we're doing this using Skype and free calls, and you have Amazon, you have eBay, and you have email. So I don't think it was lying in tatters. I really don't. And there were many occasions, just because people don't remember because they weren't there, where there were major bumps in the roads. There were bumps with cryptography, with credit card payments, with kind of scams. So the first thing is, before I go into what I believe caused it, the trajectory of Bitcoin or crypto or decentralized currency or blockchain, these are simply bumps on the road. this change is coming. It's part of a cultural shift. It relates to robotic process automation as much as it does to decentralization. This is coming. It's already baked in. It's here. And honestly, anyone who thinks different, well, they're probably going to be in for a surprise, I think I'd respectfully say.
Yeah.
As to what caused it, well, that's more complicated. So there are a number of different sort of theories of received wisdom. It's definitely the case that with the early sort of way of implementing ICOs, there were a lot of opportunists that came in. They thought they could pick up some hot money, and people did. And therefore, they had a lot of ether, and of course, they liquidated it, and blah, 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 blah. That can cause some kind of crash.
Yeah.
Having said that, there was a lot of institutionalized activity. And, of course, short selling had come in. And what you find is that whenever there are markets where institutions can play in them, really, and this is very well known in sort of normal liquid markets, regrettably, it kind of works out being a transfer payment from the amateurs to the professionals. That essentially, you know, the amateurs always, you know, buy at the top and sell at the bottom, right? And the professionals vice versa. So they'll build a price up, and the amateurs will buy, and then the professionals will, to use the language they would use, fade their position and so on and so forth.
Sure.
So it wasn't any surprise that you start to get Bitcoin trading more sort of in corridors, because there's much more to be gained by causing it to go down and then come up. Let's not forget as well that there's a lot of these kind of activities which are not illegal and not yet illegal.
Yeah.
Maybe they shouldn't be illegal, but there's an awful lot of manipulation that one can do without it being, or without it breaking the law. And therefore, you've got to ask yourself, well, why wouldn't people do it if they could? Certainly, I remember the first time Bitcoin went down and it bounced. I remember physically where I was standing and the screen I was looking at, because we were waiting for it to bounce. Because if it bounced at that point, and I think it was 4 p.m. on a particular day, we'd know that the entire thing had really been a manipulated crash, because there were options that were expiring. And sure enough, that happened. So I don't think it's, you know, we've actually just, my firm has just completed an audit of someone's trading track record. And in like 2017, they only traded for 4 months, and I think they did 800 and something percent, which is amazing, but a lot of people did that.
Yeah.
But in 2018, 12 months, I think they did 135% return. That's like a 2.35x return. Really just trading Bitcoin. So I don't know, nuclear winter. Yeah, Bitcoin is volatile, but it's not as volatile as something like the VIX, I don't think. And even if it is volatile, yeah, traders love volatility. They trade volatility. So yeah, I think the crash is. I don't think it's a crash. I don't think it's a crash. I think it's a. I wouldn't call it a correction, because I think that implies something I don't believe. Sure. I think it's a bump. Okay. It's a speed bump. It's completely understood. And there was another point which I know we've talked about before, which is that whenever people talk about the price of Bitcoin, they're really talking about a pair. You know, Bitcoin versus the dollar. Bitcoin versus sterling, Bitcoin versus the euro. But, you know, that makes sense if your life is denominated in one of those currencies. But why not Bitcoin Ether? Well, you know, how stable is that? Well, at the moment, people's lives aren't denominated in Ether. But you always have to be very careful when you talk about sort of currencies going down, because what people actually mean is one asset changing with reference to another. Sure. You know, because, you know, and I'm not sure people should be thinking about Bitcoin as intrinsically related to the dollar, for example.
Yeah.
But, yeah.
No, I agree with that, because how I see it personally is obviously, right, you know, they're trying to compare it, you know, to obviously the dollar. But the thing is, you can't actually compare the Bitcoin and the dollar in any way, right?
No, you just trade it. It. You know, a good way of thinking about it is this. Let's think about it as a foreign currency, right? So let's say that, I don't know what currency, maybe the yen or something like that, right? So let's say that I'm trading the yen. Well, I don't live in Japan, so my life is not denominated in yen, right? So that makes sense to me to think about yen going up and down with reference to sterling, right? But if I decide that I'm going to move to Japan and then move to Japan, it doesn't really make any difference to me if my yen holding goes up or down, because I'm pretty sure that the rental price in yen compared to the yen is going to be stable. So I have known tech guys that have lived their lives in Ether for a while. And they're not in this country, but certainly they managed to find stable ways of buying critical goods in Ether, which didn't particularly change. But, again, these are very, very early days. If I think about it being the 90s, maybe we were at 93, 94. We are nowhere near 96.
Okay.
And 96 was when the idea started to catch a light. That wasn't even the beginning of early adoption, I don't think.
Yeah, no, that makes sense. So obviously, if we are saying now that we're still, let's say, example given, 92, 93.
Maybe a little later, 93, 94.
Yeah, sure. So what would you say then, are we looking at currently? And let's say in the next 3 to 5 years, is that a realistic time frame to say, we're going to be in a completely different situation than we are right now?
Yeah, we're going to be in a completely different situation than we are now. Absolutely.
Yeah.
So what people talk about crypto and sort of Bitcoin, they're talking about a number of different things. I guess talking about blockchain technology and decentralization. They're talking about the main currencies that people have heard of, and are they currencies or are they just tokens of value? And then you're talking about sort of the ICO tokens and many more things beyond that as well. So I think the most important thing to think about is what I would term the extent to which there is a broad franchise.
Sure.
So there's an old, people call it a law, but there's an old sort of maxim, which is typically termed Metcalfe's law. And the easiest application is to think of it with the telephone network, right? So if I've got a phone and no one else in the world has got a phone, that has zero utility. If I've got a phone and you've got a phone, I can call you. That's kind of great. If I've got a phone, you've got a phone, and someone else got a phone, well, now there's a number of different calls we can make. And so typically you would say that the value of a network increases with the square of the number of participants.
Okay.
And a currency is exactly like a network. Now, we are at a very, very early stage with even Bitcoin. And Bitcoin is, to use financial jargon, the deepest of all of them. By far, it's the deepest of all of them with the broadest franchise. And that is a very, very small franchise. So the more, it's not so much to do with the amount that's traded or the amount that's in supply. What's much more interesting to me is the number of people that hold it and are using it. And if 100 times as many people held, a fraction, and there was still the amount of traded volume, there would be some people that wouldn't see any difference. But the value of the sort of the Bitcoin network, if you like, or the Bitcoin franchise has just gone through the roof. So the first thing that will happen is that we will move up the adoption curve. Now, adoption curves, I don't know where this video is flipped, but they sort of go in a little bit of an S sort of thing. They go up and then they sort of level off a little bit. And you get bumps on the road as people sort of deny change and, that sort of thing. That will be very profound. People talk about Facebook coin and, I guess Facebook's probably trying to punch its way out of a paper bag and do something. But Amazon coin might be more sort of interesting. Mm-hmm. All of these things, Walmart coin, all of these things, they're actually, the way they're contemplated is extremely old ideas. I mean, the way that these coins are really being thought of is really little more than sort of vouchers or, in the UK Green Shield stamps or sort of air miles or something like that. But nevertheless, they have the potential to dramatically expand the acceptability and the sort of the normality of this. This is still a bubble within a bubble within a bubble within a bubble, It really is. You'd be amazed because I think, the community is so small. How many people just don't know what this is, have never heard of it, and you just kind of think it wouldn't be true, and it is true. It's the popular view is that this is something that they don't know what it is, or it's a scam, or there'll be people that have still never heard of it, right? Yeah. So over the next few years, really expect that mindset to change, and that will drive a lot of this. Now, that is completely separate to the winds of change which are sweeping like a tornado through traditional businesses, which are to do with robotic process automation. And for some reason, the idea of blockchain and decentralization seems to have been the thing that sort of ignited this. But to be honest, automation is what's going to kind of kill and transform a lot of these institutions rather than specifically blockchain.
Sure.
But I think that's a kind of a very interesting peg to hang it off.
Yeah, cool. No, that makes sense. So, because the way I see it, although let's say, Amazon coin or Walmart coin or even the JP Morgan coin, for example, although it's maybe not, let's say, completely the whole purpose of, saying decentralization and a cryptocurrency distributed through all its users, I still see that they have the power and they have the influence. So if they're actually putting that kind of image that, yes, we are actually adopting it in one way or another, I do see it in one sense being pro, adoption, just because obviously they have the influence. And so if someone like Amazon actually implements the cryptocurrency in their systems, right, and people start using it, it's like they actually don't, there's not a very massive change in the front end for, us as the users, but it's significant because they've actually managed to make a technology that, is not very widespread yet, but they've managed to make it mainstream for their services. And I guess that's one way of seeing mainstream adoption, if that makes sense for you.
Yeah, I mean, I think the banks is very interesting. People think that all sort of banks are the same, and they're really not. There are a number of different defined cultures within the banks. The Europeans are very different from the Americans, for example, but the leadership cultures are very different. And I would draw, for instance, a very profound difference in quality of leadership between JP Morgan and, Goldman Sachs under Blankfein. So I ran a poll recently about whether or not people thought that Jamie Dimon was lying or he just got it wrong about sort of crypto. And then people say things like, why don't you shut up and give Jamie a break? I don't think Jamie needs me to give him a break particularly. I'm not sure he knows who I am. But it's not a cryptocurrency anyway. It's an internal token. Anyone who tracks what he says knows that what they're doing right now is really not compatible with what he said in the past. And in fact, the proprietary positions JPM had while he was saying it weren't compatible with what he was saying. So, you got a question there. Did he get it wrong, or was he sort of misleading for commercial reasons? And what amazes me is how many people think he was misleading for commercial reasons. Yeah. I'm pretty certain that he wasn't. He just wouldn't have said it with as much passion. The point is that he shouldn't have said it at all. Shouldn't have said it. Now, if you look instead, you contrast, say, what Blankfein said at Goldman's, and I think, I don't remember the quote exactly, but he said something like, look, I'm a banker, we're old-fashioned people, we don't like change. Yeah. But I do know that once upon a time, $1 was worth $1 because it had $1 worth of silver, and then it's worth $1 because, maybe the authorities told me it was worth $1. So, could there be currencies with consensus? There could. And it was very measured, it was very mature, and frankly, it was the kind of thing that you would expect the leader of a major institution to say. Now, I always had a view that Goldman's were really always going to come into the market around September 2018. And I think that pretty much, I was kind of saying that for about a year. And I think that's what they did. And I always thought that the right way of doing this as a bank would be probably first to focus on custody. And you can see the language change as well. People saying things like, well, it's in a bit of a bubble, isn't it? Very different to saying it's a bubble. Look at custody, maybe look at indices, maybe some other auxiliary services and so on and so forth. But the lesson from the internet is a very cautionary lesson for large established businesses with a turning circle measured in years. They just don't have the ability to change that much. So the question is, are they opportunistic, and can they be opportunistic? Because the world, all generations have their large brands, and the world loves big brands, but those big brands don't have the God-given right to survive. They can get replaced by new big brands. And especially with the sort of the cultural shift that I believe, and I'm known for saying that crypto is related to, which is sort of, the millennials having been sort of sworn at and told that they're good for nothing and that they're lazy and that they can never buy a house. And, by the way, we've broken money in the planet. I don't think those guys have any vested. I don't think they believe in the brand equity of the existing players. So I think all bets are off, and the barriers to entry are much lower than people think they are, and the barriers to change are very significant.
Sure.
So you better be good. And I'll tell you one thing, Goldman's is very good, but it's a lot smaller than people understand it to be. I mean, people in finance know that the difference in sort of culture and quality of leadership and just staffing size. But some of those large institutions, I don't know if they could change if they tried. I don't think they want to. I think they'll just resist change. And I think there'll be new people that come in, and I think it will be brutal. I think it will be brutal like the internet was brutal to books, and to records, and to logistics, and to everything.
True. You can even take the example of, let's say, Amazon versus Toys R Us or Netflix versus Blockbusters, right?
Well, you're talking about Amazon versus Toys R Us, but of course, in my day, Amazon sold books, right? So it was Amazon versus Barnes and Noble.
Okay.
Right? Yeah. Barnes and Noble's still around.
Yeah.
But they're not Amazon, right?
Same.
They got Amazoned. It's a complete cautionary tale. It's complete cautionary tale. It's interesting because back in the day, I think we all thought that the internet was about disintermediation, going direct. And it was, but you just create new intermediaries. And like Amazon is a bigger entity than anyone could have dreamed of before the internet. And it's a very, very cautionary tale. You think this isn't possible? It's possible. Nothing is sacred. You think the world's largest custodian can't be replaced in 15 years? It can. It can be replaced so comprehensively that in one generation it can be forgotten. And you should not believe anyone that tells you that isn't true. We know it's true. We saw it in the last cycle.
True. I can't argue there. It's a very good point, because if you think about it, it actually doesn't matter, if it's in tech or any other industry, you always have to adopt, no matter what, You have
to fight to survive.
Yeah.
So, what's happening at the moment with regulation is very interesting. So I think I often get a little misunderstood or misquoted on regulation, because I think I get so sort of down on the regulators. Everyone thinks I'm against regulation. I'm actually hugely for regulation. I sort of passionately believe that, well, certainly the retail general public absolutely need to be protected. But there's a funny thing with regulation that you often get sort of unintended consequences. So here's the thing. Imagine you were an institution and you started to realize that actually this was a little bit of a threat, and you didn't want to be, let's say, Amazoned. Right? You didn't want to be Amazon out of existence. What would you do? Well, strategically, you would try to raise what are called the barriers to entry. That would mean that, whereas I just said a moment ago, it's actually surprisingly easy for new people to come in and get traction. They do not need $1 billion of capital. They can do this. What I would try and do is I would try and erect those things. And how would I do that? Well, if I had a magic wand, I do it with regulation, because I'm regulated and I've got compliance and I've got infrastructure, and these young guys can't and don't, and those are huge barriers. So without drawing any causal link, what I would say is that certain types of regulation will have the effect of favoring the incumbents. That is not to say that I don't believe in regulation, but if we are not careful, what will happen is that instead of doing what I imagine the FCA or the other regulators are trying to do, which is trying to take an industry which they're a little bit worried has got some sort of Wild West-like characteristics and trying to clean it up and grow it up. That all sounds great. Here's what they're going to do. Actually, the only guys that are going to be able to figure it out are going to be the very large incumbents. Okay. And they will massively raise barriers to entry that don't currently exist. So they'll sort of clean it out. And then what will happen is this. Those guys, oh, my God, they know how to win this game. They're going to take crypto. They're going to wrap it up into – it'll be in a UCITS fund within 2 years. And then they'll start, putting it into portfolios and ramming it down the throats of the unsuspected retail investor. It's a terrible, terrible thing. Yeah. So that is a very difficult sort of needle to thread. And I'm not saying that there is a particularly obvious solution, certainly not one that could be discussed easily in a format like this, but one has to be extremely careful, because, again, you have to remember, if the large banks, if the large institutions, the large asset managers like BlackRock, if they had a magic wand, they would say, absolutely, let's say that you can't play unless you've got an enormous amount of regulatory capital, a compliance department, and this and this and this and this and this, because what that would mean is that no one else was able to play apart from us, right?
Sure.
And so whether or not they have managed to achieve it sort of by putting their thumb on the scale, that is definitely what I think there's a possibility that will happen. But
Sure.
I don't know, talk about a turning circle. The regulators don't move very fast, and everyone's a little bit caught up with Brexit at the moment, so we shall see.
No, I understand. Obviously, regulation is always a key issue, but there's always good versus bad regulation, because obviously too little regulation will obviously that's kind of what caused the let's say the bump in 2017, but then overregulation might actually not allow the full potential of where crypto could be going as a whole. So
I don't know. I mean, I think, listen, look, the short selling was a result of certain permissions coming in and institutions coming in. That was actually, I think it's arguable to say that the crash was as a consequence of the market growing up, because what happened when the market grew up is it started behaving like normal liquid markets behave, which is that once amateurs have come in, the professionals manage to take all their money and take profits, right? So complicated stuff.
So what we'll do now is we'll take one or two questions from the audience.
Sure.
Let's see. Okay, let's have a look. Okay, so first question, what do you see as the biggest single challenge facing crypto fund managers?
Well, there's a number of different ways of answering that. I mean, obviously, adoption would be important in order for them to raise the capital.
Sure.
Of course. Obviously, they would need to have something which they could sell to allocators, which they don't at the moment. There are no mandates which would include this. But there's a much bigger problem, which is that cryptocurrencies. Now, are we talking about? I'm going to assume that the question is about cryptocurrency fund managers as opposed to, let's say, blockchain.
Sure.
Blockchain funds. Right?
Let's keep
the trouble
it
with
crypto.
Cryptocurrencies, there's no depth in crypto at the moment. Not really. I mean, Bitcoin's got some depth. Bitcoin's got a lot more depth than Ethereum. I think it's still the second coin. You get outside the top six, there's no depth at all. Yeah. So I think it's challenging. If you do think like we in the past, we've done things like we've built artificial intelligence to do wonderful sort of coin portfolios that behave beautifully, and the sort of absolute return and all of this kind of stuff using sort of artificial intelligence and machine learning. Yeah. The reality is, to the kind of finance guys who understand the jargon that I'm about to use, it's you've got massive fail risk. You just can't execute, and the spreads are crazy. So you can't actually do it. Now, you can do it if you stick to Bitcoin, right? And certainly the trades that we've just audited, which have been quite small, it's like a few million, sure, maybe like 5 million of assets or something. Essentially, that was just Bitcoin trading. And very, very good absolute return. Could you do that at 100 million? Maybe. Could you do that at $1 billion? I don't think you could do that at $1 billion. Could you run a coin portfolio at $1 billion? You've got to be kidding. So these are the challenges. Now, having said that, I'm not really sure that matters, because I think a lot of the guys out there, because they think they can make such strong returns, and they kind of think, well, I've only got to run like 50 million or sure, 20 million or even 5 million. And maybe they're right. But we need there to be a lot more depth in the market before this becomes a normal asset.
Yeah, because I mean, technically, if you're speaking about the proportions, right now we have a market cap of roughly 170 billion, right? So obviously a 50 million fund in proportion is actually, it's it's not such a small fund, right, compared to the total.
Yeah,
market
well,
cap.
that's true, but also the market cap's misleading as well, because you really want to look at the amount that's in sort of supply. I mean, I know that sort of, I don't think we all kind of monetarist nowadays, but you know, like you can think of it as being analogous to like an M4 sort of number in sort of real money. It's like, you know, if you got a lot of Bitcoin locked up with miners, well, then what you're calling the market cap is even smaller, right?
Sure. Yeah.
You know, and by the way, we all know that you do. And we all know that, of course, it's completely decentralized, apart from a shocking amount is actually in a single jurisdiction in quite a small geographic region too. So, you know, decentralization, sure.
Yeah. No, that's an issue too, because I mean, the concept is to be decentralized, but then, you know, I've done a short video about, let's say, the idea and the misconfusion about cryptocurrencies being hacked, but when in reality it's a centralized cryptocurrency exchange that's been hacked, just because it goes, against the whole concept.
Absolutely. Yeah. So I'm not I think I'm not a huge. Well, I was going to say I'm not a huge believer in proof of stake. That's okay. Maybe that's not quite right. I think it's really not proved, and from a technical perspective, I kind of see it as. I see it as eminently more, an order of magnitude more sort of hackable. But you know, we'll see. You know, we all know that proof of work. I can't believe that we're going to still be using it in sort of 10 years' time. But you know, because it really is quite expensive and quite damaging to the environment, to put it mildly. But we don't really have anything else that works yet. So let's see. But I'm not sure that proof of stake is quite right. I don't think it quite achieves the objectives, but we'll see.
Sure. No, I mean, the issue with proof of stake is, you know, it just makes people with larger holdings wealthier for just holding the coin. So, yeah, it's difficult to say. But then proof of work is environmentally unsustainable. But I mean, we'll see how it goes. I can't.
We'll see.
Yeah.
We'll see. There are many solutions to that problem, which are to do with like just the normal kind of pace of progress.
Sure.
You know, they may be solved by all sorts of other things. But yeah. So does that answer the question about the challenges?
Kind of. Yeah. I mean, I hope it does. But obviously, you know, crypto is still something.
There are asset challenges. Listen, if I was a crypto fund manager, which I'm not, the issue would only be, could I get people to invest in my fund? You can, right? You absolutely can. You know, you package up the returns, you get them properly audited, and you go out there and the kind of people, you won't be able to get institutional money, but you won't need institutional money because you're not playing for like a 5% return. The management fees are going to be lower than you'd raise in a different thing because you're going to have a lower denomination, but you can get very, very, very strong returns. You know, I know we've literally, one of our analysts showed me that they would literally audited someone's returns, and they're stellar. But, you know, I wouldn't go out there with a multi-coin strategy because you're not going to be able to implement it at scale. Not yet.
Okay. That makes sense. I guess that's a better answer to the question.
Like everybody telling me that I'm wrong. But no, you can't do it at scale. I mean, it depends what kind of numbers you're talking about. You can't do it at scale.
Okay, should we take one more question? Let's have a look. Okay, so someone is saying, is it merely a speculative virtual currency? What's your take there?
Well, that's a very interesting question. So I think speculation is in the eye of the beholder. It's the best way of answering that. There is no question at all that to some people, they view it as a speculative asset.
Yeah.
However, there are no liquid assets where there aren't some people speculating on them. So the question isn't, is it a speculative asset? It's, is it only a speculative asset?
Yeah.
And I think it's not only a speculative asset. It is possible to use it in a way which is extremely normal and doesn't involve speculation. Listen, we've been paying our lawyers in Ether for quite a long time, and receiving, like, billing people money in Ether for consulting projects for, more than a year. And, we convert back to fiat, and there's all sorts of good reasons to do that. And it can be easy to do, and it can be slightly different, and it kind of works. It doesn't avoid any taxes. It doesn't, doesn't make anything sort of more or less hard or more or less illegal. But in some circumstances, it can actually be a little quicker, especially with, we're all used to like fast banking in the UK, where things like clear instantly. But, you try sending money between Luxembourg and the UK, and it can be very challenging. Yeah. So we use things like that. Well, we're not using it to speculate at all. Sure. No, it's not. But you always get people that speculate and everything. You get people that speculate on timber, and like timber is literally like the trees grow at a very stable rate. So no, I think this is real stuff. Currency, it's a complicated point. I'll tell you one thing that people don't often note. So everyone knows that, is it a store of value? Isn't it a store of value? Classification as a currency has actually really got a lot to do with taxation. So I believe that the UK government is extremely unlikely to ever classify these things as currencies, because if they did, they'd have to, it's not about taxing people on the gains, they'd have to allow them to offset taxes on the losses, and miraculously that would mean that no company's ever made any gains and they'd never pay any taxes again. But here's the real thing. We're used to money being what we call fungible. That means the dollar in my pocket is the same as the dollar in your pocket, whether it's rumpled or whatever it is, and we can swap it, and there's been no change. That is not true with cryptocurrency. It's not. So, you go to most brokers and you try and do a trade, particularly the good ones, they'll do what's called a backchain analysis, and they'll see where the crypto comes from. Sure. So crypto has provenance, and the provenance can be good, bad, ambiguous, known, unknown. Yep. And therefore, each sort of little bit can have a different risk profile. That's a very interesting point. It means it's not quite as fungible as currencies ought to be. Doesn't mean it can't store value. Doesn't mean it's not a medium of exchange, but it does actually compromise it a little bit. Sure. So these are sort of interesting points that I've certainly not heard other people note. Yeah.
So basically let's say the background or the history of that Bitcoin, right? So saying
that's critical. Yeah. I might have some Bitcoin that comes from like Cumberland, which is the miners, and I might have some Bitcoin that someone gave me on the slopes of Switzerland, which have a much more sort of patchy provenance. Well, those are worth different amounts. Okay. Those are worth different amounts.
Yeah. So
they're different.
I guess it is, or it can be used as a means of speculation, but people use it for different things, right? So some people actually
mean speculation.
Yeah. Okay. Because it's the same by us. So UK to UK is instant, but then let's say Austria to UK is sometimes 2 days. But I've never had it happen the same day. Very unlikely.
Well, because we're sort of financial institution, we move reasonably large amounts of money in some funny currencies all over the world. And you'd be amazed by sometimes, like, you look under the bonnet of financial services, and anyone that works in financial services will tell you it's really held together with sellotape and string, and you've still got people like, we've had things like payments haven't been made because, I'm not kidding, like someone forgot or they went out to lunch. You think this stuff is automated. It's not automated at all. You fill it in on a computer screen, it still gets like printed out and put on a settlement person's desk. So,
I guess that's the issue as well, because there is no real alternative yet, but what we're seeing might become an alternative, right? So the threat hasn't existed in a very long time, and so if you're not,
that's right. I mean, you got to look at all these things as being really, really separate. So will currency be sort of digitalized and use encryption and strong encryption? Yeah, I'm sure it will. It's inevitable. Of course, it's inevitable. We're like walking around with paper money in 1,000 years' time. It's just a question of when. What about kind of technology? Are sort of robots going to take over?
Who knows?
Yes, they are. Robots are going to take over. Robots have already taken over. I'm really not sure how long sort of normal corporate lawyering will last, because there's an awful lot of drafting which will be better done by computers, to be perfectly honest. And we're going to see the costs drop and the quality go up. What about back office and banking? Oh God, you've got to be kidding me! This is crying out to be like automated, right? But it's all different things. Do they depend on blockchain? No. Does blockchain help some of them? Some of them, maybe. Some of them, not all of them, but some of them.
Yep.
You know, have we actually had any problems with centralization? Well, the main problem that was kind of foretold in the sort of the Satoshi paper was really about sort of inflation and about money supply. I mean, bearing in mind, it is actually not entirely clear that quantitative easing actually leads to the money in our pocket being worth less, but that was, of course, the spectre that allegedly this was born out of. Well, that's very different to central custody. I'm not saying that I believe in centralization or decentralization. That's sort of too much of a political point, I think. But you know, you can have a currency that isn't issued centrally, but you still got some kind of custodian, so that if you die, your assets don't die with you, for example. You know, and if you do something like, you know, you print out your kind of passwords or your seeding phrase and you just put it in a safe, that kind of looks pretty much like a central store to me. So, you know.
Yeah, I mean, there is no perfect, you know, opportunity. It's just about, you know, improving it to the best of, you know, of your ability, basically, right? But you can't automate the whole process.
Listen, this is about progress. This is what I find so hard to sort of explain. It's so obvious that this is next. It's so obvious that this is next, right? So let's not talk about whether it's right or wrong, because it's going to win anyway, right? It's like when people say things like, oh, there's millennials, they don't know what they're doing. Really? Okay. Well, I'm going to bet that we're all going to end up doing what millennials are doing because they're younger and we're all going to die. So this is just next.
Okay. Yeah.
It's just next. This is just next.
It's a good point. So I think we'll wrap up now. What we'll do is, if you have any last remarks, now's the time. So any last words that you'd like to give the audience?
No, just thank you. Thank you very much for. It's been a great pleasure. It's always great to talk to you, Max. So.
Yeah. Likewise. Thank you very much for joining us, Phil.
All right.
Okay. Thank you again, guys. Okay.